Hi, I'm Rinde from AskRinde, and welcome to the channel where we teach people in distress how to solve their foreclosure, income, and credit. So today we're going to be talking about how to stop your mortgage payments and avoid foreclosures. As we know, the CARES Act has been passed, which is a relief bill for individuals and businesses, and it encourages servicers and mortgage servicers to extend forbearance agreements to people with mortgages all across the U.S. Now, a forbearance agreement is simply an extension or a courtesy from the bank that forbears or defers your obligation to them. So in no way is the forbearance agreement a forgiveness of debt or suspension completely of your mortgage obligation. What it does is it basically just shifts it down the line. So whatever the amount of months that you've been allotted or allowed to be able to have your payments forbeared, so to speak, then they will actually defer or not require that your payment be made for those months. Now, at the end of the duration of that time, they will require all your payments. Which brings me to my 3 tips I'd like to share with you on how to stop your mortgage payments and get a forbearance agreement put in place for your home. So the first thing you want to do is make the request. Many people assume that because there was an act passed or as a government initiative put in place, that the servicer will just automatically give them a forbearance. That's not true. You need to actually make contact with the servicer and request a forbearance agreement. Now, further than that, many people are making a mistake because if you've tried to actually get your mortgage payment stopped and you've tried to go for forbearance, you would understand what I'm sharing here, and that is most people are calling the mortgage servicers, and what's happening is that because of the backlog they're being inundated with requests, what they're saying is that they're just taking the phone call and they're saying, yes, we understand that, we've heard what you're saying. Some servicers are either asking for documentation, meaning that they're asking for proof that you actually have a hardship or you've been affected by the current climate, economic climate, or some of them are taking basically your verbal validation. Now, with that being said, most of them are saying that they will send you a confirmation that you actually have the forbearance agreement that you've requested put in place. And many people can attest to this, the fact that it's been weeks. Some people have requested the forbearance as early as early March. They still don't have any paperwork yet. Which brings me to my next point. Any request that you make with the bank that you're actually requiring them to actually give an obligation, you want to make sure that you have it in writing. And that's why you need something like a qualified written request, where you send them the request for forbearance in writing to them. In writing, you must send it to them in writing, because anything that you're doing verbally holds no weight. You can actually request a forbearance and then they come back and say, well, yeah, you talked to so-and-so agent, but it was never confirmed. We were going to review your call and get back to you. So you have nothing in writing to actually back up your forbearance request. So you must put your forbearance request to the bank in writing. Even if you have a bank that's saying, yes, okay, we heard what you're saying, like my bank, for example, my bank does not need or require anything. They, based on my payment history, when I made a phone call to them for one of my properties, they said to me, okay, well, sure, we will go ahead and grant that and we will send you something in writing. Now, what they've done, they were supposed to mail me something weeks ago. I have not gotten it in the mail. I did get an email though. So you just need something that's going to be in writing from the bank, communicating the fact that they've absorbed your forbearance request, that they have that in place, either via email or postal mail. You want to make sure that you have that in place, and you want to make sure that you use this qualified written request to send into the bank. You can easily get this form. It's included in my foreclosure crisis guide, which you can actually get by clicking the link below. You want to make sure that you send in your qualified written request to the bank to ensure that you actually have a paper trail and you have backup to support the fact that you not only requested this forbearance, but the terms and what they stated that they would do were confirmed in writing from them to you. Because with banks, they're businesses, and with business, it's all about the paper trail. So you want to make sure that you actually have initiated properly your forbearance request, not only by requesting it in writing and also calling them and asking for them verbally, but ensuring that the terms that they've agreed to are actually communicated to you in writing from them. This is a very important point because different services are doing different things. Maybe one has a term where they will allow you to go 3 months, one has a term they'll allow you to go 6 months, and then some have other options that they put on the table where they're not allowing up to 90 days. They're allowing only up to 30 days or 60 days. So it all depends. You need to make sure that whatever they've agreed to, they put it in writing. The second thing that you want to make sure that you do when you're dealing with the bank on your forbearance request, you need to make sure that you request during the forbearance period a copy of your mortgage statement. So some banks will stop sending out the mortgage statement. Others will continue to send a mortgage statement, but what you want to do is you want to make sure that you get a copy of your mortgage statement. And the reason being is because they are not supposed to be charging you late fees for forbearance. That's one of the terms of a forbearance agreement, that late fees should not be charged. So you want to make sure that you get your mortgage statement sent to you and that you take a look at the mortgage statement. And specifically the line item under your principal and your interest, where it actually shows if there's any outstanding charges due, such as escrow shortages and then specifically late charges. You want to make sure that you're not incurring any late charges for going ahead and requesting or being a part of a forbearance. Remember, there are many people who have the opinion that you should not take a forbearance, you should take a forbearance. That really is up to you. Everyone's situation is different. The forbearance has to be repaid. So that being said, it's a matter of really whether you pay now or you pay later. Some people don't have the money to pay now. So some people need that to be able to figure out what to do so that they can pay. That's completely up to you watching the video, whether or not you need a forbearance agreement now or you need one later. The fact is that it's available, so you want to take advantage of it and basically see how you can actually use it to your best advantage. Number 3, so the third thing you want to do in your negotiation with the bank and ensuring that they keep to their bargain and their side of the forbearance agreement is to make sure that they're not negatively reporting your credit to the credit bureaus. So in order to ensure that your credit is not being adversely affected and to cover any mistakes that the bank may make in reporting, you want to make sure that there again, you actually put your request in writing and you have protection in written form, should in case you need to counteract anything that they've done, any errors that they may have done. Because banks, even though they're large financial institutions, there are mistakes made, as we've seen many times. Sometimes there's issues or miscalculations with escrows. We've seen miscalculations with people's loan to value. We've seen many miscalculations by the banks, even to the point of causing people to go in foreclosure by errors in their computer systems. So you want to make sure that you protect yourself. And we've had this letter put in the Foreclosure Crisis Guide in order to help you to deal with specifically the credit portion. So you can use that letter to be able to send in order to make sure that you are secure and you put in writing to protect yourself should in case there are any errors being made or they do not actually keep to their end of the bargain. So that leads me to my last point, and that is this. The climate that we have when it comes to a forbearance, specifically those of us who have been given maybe 90 days, some people have been giving a little bit longer depending on the type of loan that you have. But one thing I will share is that whether it's 3 months or 6 months, the fact is that, as we know, and I've taught on my channel here for years, the setup for a foreclosure, the setup and the timeline for a list pendants to be filed is 3 months. So those of us who've entered into the forbearance agreement can rest assured that at the end of those 3 months, if we don't have the money to pay, that's an immediate foreclosure. Because generally with before crisis, pre-crisis, and I've been teaching about this for years, there's a lead up time to that. When people fall behind financially, they have like the first month and the second month. And time seems to go longer because you're dealing with on a month-to-month basis. You're trying to figure out how to come out. And in this situation, the bank has, because of the climate, has said, okay, we'll give you, go ahead and we'll give you a forbearance agreement. That will be 3 months, that will be 6 months, whatever the case is. One thing is you have to be cautious, and that is that if you don't have the money and you don't have the lump sum to pay them, and most likely it's going to be like 4 months that you're going to be due to pay, because with the forbearance, they're going to not only count the 3 months that you haven't paid, but they're going to count that 4th month, that current month, that they're going to want their money. So you have to have that money lined up in order to be able to avoid foreclosure. If you don't, then you can rest assured that you will be put into a situation of an immediate foreclosure, because there's no stipulation that will stop their foreclosure proceedings. It may delay it. So whereas in the past, if you were going month to month and they knew that you were coming down the pike to be able to start a foreclosure proceeding, they would send you what is called a notice of intent to foreclose. And those notices will come, 30 days, 60 days. Still, they won't do anything. They won't file a list pendants until they legally can. Where they legally can file a list pendants is that 3rd month. If you're not working now or you're working now, Are you prepared to be able to make that payment at the end of the 3 months? And that's where renegotiation comes in. So I want to share with you key insights on how to renegotiate with the bank your current forbearance leading up to the time of the expiration. You want to make sure that you have two things in place. You have to have either an option of renegotiation to extend the forbearance period, and then you also need to have a plan in place for your income so that you can actually figure out how you're going to pay for it. Because this is, like I said, a deferment is not a suspension. So that being said, the two key things that you want to keep in mind are, how am I going to renegotiate this past the expiration time? And the second thing is, what income and how am I going to structure this so I can cover it, because I know what my mortgage payment is and I know the lump sum that I need to come up with. This is why the stimulus checks that they're sending and all these things are good. Take that money and just put it away. Don't spend it because you will need it. So specifically with renegotiating your forbearance, there are key factors that you actually need to present to the bank and put in place in order to be able to get a renegotiation and an extension done successfully. In addition to that, you need to have a financial plan and a game plan for what you're going to be doing regarding the income side of it. Because when it comes to where we are, some people are going through a restart and some people are starting over. And you need to know how to start over. If you're coming from a place where you lost your job and you're not in business, you don't have any other side hustles or you don't have anything else set up, what do? Genesis 8:22 says, as long as the earth remains, seed, time, and harvest. You have to think back to where you started. Everything starts with a seed. So you always have to look at what you have currently, because what you have is an indication of what you have in your hand that you can actually use and sow in order to get to where you need to be. I'm saying this to say because many of us find ourselves in a state of confusion. It's really a perplexing place to be in when you're in foreclosure and you're trying to figure out, you're staying up at night trying to figure out, how am I going to pay this? I don't have anybody to call. I don't have anywhere to turn. I don't have the money. Am I just going to basically go down this road without any help, without any way to stop this? It's like you're going over a cliff and you're driving towards the edge of the cliff, but you can't stop because you don't know where the brakes are. Well, I'm going to teach you guys how to put the brakes on it, how to avoid foreclosure, and how to not only renegotiate your forbearance, but I'm also going to teach you how to actually start over and how to actually, in distress, create income. Because when you're in a distress and you are in a place that you're completely wiped out, creating income and starting over and creating and picking yourself up through finding income, whether it's a job or it's a business or both, it takes a specific line of action. It takes a specific mindset. It takes you have to be taught and mentored through that. And that's not an easy place. And I've been there many times, and I've been teaching people for years how to actually come out of distress and get out of distress, generate income in distress, and move past there. And it's a very unique place, and it's a blessing to be in that position, to have the knowledge to be able to share that. Most times in crisis, you need a plan. You need a plan of how to go from point A to point B. So I'd like to invite you to download my free Stop Foreclosure Guide, because it gives you the ABCs. It gives you from where you are now to how to start to move towards a solution. And so it's very key. So I would like to also invite you guys to please comment below and share some of your tips on what you've been able to do to be able to not only get your forbearance, but also some of the things you've seen your services and your bank do, because many people watch this channel looking for information on foreclosure, income, and credit. And we want to make sure that you can share some of your knowledge with some of our audience so they can get helpful tips from you. Please, if you've gotten value out of this video, please subscribe and also share the video. I look forward to seeing you guys in the next video. Until next time, thank you so much for watching.